1, 2, 3, do it.
The first time the Dow Jones Industrial Average passed the 13,000 mark.
Another milestone for the market, 14,000 on the money.
Record-breaking kickoff to the fourth quarter as the Dow Jones Industrial Average closes at a new all-time record high.
Let's celebrate!
The closing numbers on the markets today. At one point, the market fell as if down a well, over 700 points.
Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
That's not right. How can the price be going down? Something's wrong.
When the crisis hit in 2008 and 2009, it became necessary for the big bailouts had to come from elsewhere other than the Congress. Sure, the Congress spent billions, but the Fed pumped out trillions of dollars to prop up this dollar system. And the dollar system, survived it all to this degree, but it did it by just keeping pumping and building a much bigger bubble. So I not only see bubbles almost every place I look, in the bond market and in the stock market, I see it in the dollar market, the worldwide dollar market, because this dependency on debt is so out of control. The bond markets are huge, and 54% of the bonds had to be bought by central banks. And the central bank's credit, of course, they create credit, but what they hold in reserve are dollars. So this is huge, and I don't think anybody fully understands how this can become unraveled. They say, well, it couldn't happen. We don't even see any bubbles anymore because this is so different. We see that these that stocks and all will continue because, well, some price and earning ratios look pretty good, and there's going to be continued growth, and not paying a lot of attention to the people who are falling behind, the homeless now. Our big cities have had tens of thousands of people that are homeless. They don't have the money to pay for rent. Even if they have a job, they can become homeless because they don't have enough money because rents are too high. Then they say there's no inflation. Well, the cost of living is high. In a city like New York and a city like Los Angeles, cost of living is very high. They can't pay the rent, and even the food prices are high. But our government tells us no inflation. Well, the main job we have is for the Federal Reserve to create more inflation. The problem is there's not enough inflation. Inflation is an indication of economic growth. And that's a bunch of baloney. Why wasn't Zimbabwe and Venezuela doing real well? They had a lot of inflation. So that is total nonsense. And yet, 100% of the activity in these last several years, maybe even 8 years, the whole purpose of the Federal Reserve was to stimulate inflation, get prices going up, and that would be a sign that there's economic growth. It didn't work, and they hide it, and they distort the views, they distort the financial reports on unemployment. There's probably close to 1 million people that are out of the workforce now, and yet the unemployment rate is 4.3%. So nobody's suffering. And there's a market out there. They say there are so many jobs and no applicants, and we're in boom times. Well, there's one person who proved that some of that was nonsense, and that's Donald Trump, because he maybe was listening and knew what was going on to what they were talking about in the government, but he went to the people who felt left out, and that is a large number of people, and they were independents and Democrats and Republicans, and it was his empathy for these people.
94 million Americans are out of the labor force. Over 43 million people are now living in poverty, and over 43 million Americans are on food stamps. More than 1 in 5 people in their prime working years are not working. We have the worst financial recovery in 65 years. In the last 8 years, the past administration has put on more new debt than nearly all of the other presidents combined.
So there is an event, coming that will suddenly change this whole setting, and the bubbles will burst. And if it lets air out slowly over a period of time, it could be handled. But unfortunately, most bubbles burst and let all the air out at one time. Even this week, there's some activities going on. There's an election, in Britain. There's some European Central Bank meetings going on. There's some hearings going on this week with Comey, and people will be watching that. So there might be some other event, but that is what is unpredictable. But I think it is safe to say that on long term, the policy that we have of spending, running up debt, and telling other people how to live, and getting involved and making enemies and making excuses for doing what we're doing for regime change. There's even hint today about regime change in Garter, because they're not coming together. They're not supporting, the Saudi, Israeli, U.S. policies of being uniformly opposed to, Iran. Something like this, this would be, I think, catastrophic if all of a sudden there is a regime change in Garter. But those are the kind of things that float around. But even without one of those particular events, the bubble can't last. The bubble is there. It isn't any different financially that bubbles burst. But it is different. Each bubble is different, has a different characteristic, the length of time and who it affects and this sort of thing and what precipitates it. And that is what is unknown. But I do not believe they've just outlawed bubbles and that we're going to have perpetual prosperity. Right now, we already know we don't have the prosperity. So it used to be that the new era said prosperity for everybody and it was going to last forever and everybody was going to be happy. That is not the case. We live in a very dangerous time financially, and yes, the foreign policy is horrible. But if we changed our monetary policy and said that that which you can't afford by either borrowing and borrowing and taxing, you shouldn't be doing it. Matter of fact, you shouldn't be able to borrow. That you should not be permitted to print the money, no matter how well received that money is throughout the world. And that, in one sense, was a gift to us, but it was also a very dangerous gift because we'll have to pay it back one way or the other. So I think it's fascinating. I think it's very interesting. I don't think it's complex. I think big government, big banking, and fiat money, all these things fully explains the difficulties that we have throughout the world.
Many people think that the stock market is going to crash by the end of the year. Hopefully, that will not happen. But the ridiculous stock prices that we are seeing right now certainly cannot last forever. Markets tend to go down a lot faster than they go up. And so when the inevitable market crash does take place, those that have made large bets against the market will make huge fortunes. It happened in 2008, and it will happen again. Of course, some of the biggest names in the investing world are also anticipating a major downturn very soon. Great article by Jeff Nielsen at spotmoney.com that highlights Buffett's equity portfolio is valued at $135 billion, with $100 billion in cash. That means more than a 40% cash component, an unprecedented mountain of cash in the history of Berkshire Hathaway. The question is why? Nobody ever knows exactly what Buffett is thinking. But it isn't too hard to figure out that he plans to use those billions to buy up stocks for a song after a big market crash happens. I have also previously written about other big names throughout the financial world that are warning that a new financial crisis is imminent. The last time I saw so many prominent investors sounding the alarm was just before the market crash of 2008. But most people didn't listen that time around either. And of course, those that believe that a market crash is coming are doing a lot more than just talking about it. According to Zero Hedge, there are now more short positions betting against the Russell 2000 than we have seen at any time in the last 6 years. The Russell 2000 index posted a 2.2% decline in May, its worst month since October, and it appears a large swath of investors is now betting it has further to fall. As Bloomberg notes, hedge funds and other major speculators have a combined net short position of 73,030 contracts in the small cap index futures. According to the latest data from the Commodity Futures Trading Commission, Russell 2000 sentiment has sharply declined since January, when future contract positioning reached record bullishness. It's now the most short since May 2011. The last time investors were this short the Russell 2000, it fell by almost 30%. Can we expect something similar this time? We will just have to wait and see. Meanwhile, there has also been a surge in the number of investors betting that we will soon see increased market volatility. As Bloomberg notes, with the VIX down more than 30% this year through the end of the last week, investors have been using options to bet on volatility. As the chart above shows, the volume of contracts wagering on a resurgence of market turmoil has reached its highest level since last February, relative to those calling for a drop in price movements. Because markets tend to go down much faster than they go up, most of those that bet on increased volatility are typically doing so because they believe that a stock market crash is coming very soon. And it is also interesting to note that hedge funds are jumping into gold at a rate that we have not seen since 2007. Hedge funds are jumping back into gold. Money managers boosted their long positions in US futures by the most in almost a decade in the weekend in May 23rd. Commodity Futures Trading Commission data show gold is a safe haven asset, and it is a very good place to be during a major financial crisis. So if hedge funds are anticipating that we are on the verge of a major market downturn, it would make sense for them to be piling into gold. All of the moves that I have discussed above will end up looking quite foolish if stocks just keep going up and up and up. But if the market crashes, those that have positioned themselves ahead of time will end up making a killing. Today, the stock market bears absolutely no resemblance to economic reality. But at the same point, that will change. And with each passing day, we just continue to get more bad economic news. According to official US government figures, there are 102 million working-age Americans that do not have a job right now. Today, we got more confirmation that the US economy is slowing down. We learned that new vehicle sales fell on year-over-year basis for the 5th month in a row in May. And we learned that factory orders and new orders for durable goods both declined last month. The US economy is not healthy, and it hasn't been for a very long time. Because we have shipped so many jobs overseas, manufacturing shares of US employment has fallen to an all-time record low. The middle class is shrinking, and somewhere around 2/3 of the country is living paycheck to paycheck. We have been able to maintain our national standard of living by going on the greatest debt binge of all time. But every additional dollar of debt that we take on makes our long-term outlook even worse. Just because he's living in the White House does not mean that Donald Trump can automatically turn things around. Without the help of Congress, he cannot cut taxes, repeal Obamacare, eliminate unnecessary federal agencies, or implement many of the other items on his economic agenda. And the truth is that because of the way that our system is structured, the Federal Reserve actually has much, much more power over the economy than Donald Trump does. When the financial markets crash and we officially enter the next recession, most of the blame will be placed on Trump But it won't be his fault. Instead, it will be primarily the Federal Reserve's fault. And we need to educate the American people about this ahead of time. What goes up must come down. And this irrational stock bubble has been living on borrowed time for quite a while now. It isn't going to take much to push things over the edge, and there are all sorts of candidates for what the next trigger event will be. Finally, if you're new here to the channel or you've been spinning around our videos for a while, be sure to give a tap to that subscribe button there and turn on the notifications so you'll know the next time we post a brand new video. God bless you.